Hello, hello, OFP Nation. Welcome to Forex Focus, where we talk all about mastering the art of trading with a strong mindset.
Hello, everyone. We are back with another weekly episode, and today we are talking about something that is really interesting, just as all of our episodes. But you already know that this is going to be interesting. So, yeah, we're always excited to talk about trading things.
Normally, when Andrea says we're talking today about something very interesting, that usually means she's drawing a blank on what the title for today is.
No, it's not true. No.
Just kidding.
You'll see, because today we're talking about navigating market volatility with a
Oh,
mindset.
she
No,
remembered.
no. I mean that, like every single episode we talk about interesting stuff.
You. She does. She does. She does say
Yes,
that.
I do.
Barry, are you with us?
Yes, I am here.
Hello, Barry.
Barry,
Yes,
so
can you hear
lovely.
me?
Yes.
We can. We hear you loud and clear. It is so lovely to have you with us, our dear friend. So thank you. All right. So we're gonna give maybe 1 minute to see if, to give anybody an opportunity to come in and join us. And then we're gonna kind of dive right in on today's topic. Um, so yeah,
Yes.
we'll give it a
Let's
minute.
hope that some people join us, because
Yes,
it's always
definitely.
exciting when people join and comment.
And for those of you who are watching the replay, shout out to you. Thanks for stopping by. Thanks for
Yeah.
listening. Thanks for tuning in. We appreciate you.
We do.
We do. Oh, for a minute there, that was you, Barry, saying hola.
Hola.
Saying hola in the chat had me over here thinking, all right. Whoever's tuning in with us, make sure you let us know who you are in the comments and where you're tuning in from so we can shout you out and show you some love.
Yes.
Make sure to do that.
Hello, God.
Damn. God says,
Damn.
damn. What's up?
Damn.
We don't know what that
Yeah.
means or what it's for, but it's good to see
We
you
hope in
today.
a good way. We hope in a good way, like
Yeah,
damn,
we hope
you
in a
know.
great. Thanks for hanging out with us
Yeah, but
today.
thank you.
God, I hope you got your tea, you got your snacks, you got whatever favorite drink you like to sip on, because we're just gonna hang out and just have a little chat. Nothing
Yes.
fancy. Nothing fancy. Andrea, ¿está lista?
Yes.
All right.
Are you guys ready? Are you guys ready for my questions?
Yeah, we are. Yeah, Goth, it looks like it right now. I don't know.
Maybe you
People,
can tell if you know anybody else who likes this podcast to join us, or you can share this on your socials or whatever, so more people can join.
yeah, people might be
Well,
busy.
yeah. Well, let's jump right into this. So my first question would be, what is market volatility and why does it occur?
Who's gonna go first? I always go first.
Do we need to be flipping a coin for it?
We need a rock, paper, scissors.
That, that,
Oh,
that, that,
I can't even see you.
you
How
Yeah,
can
is
see
this
me
gonna
first.
work? I
But,
can't
and I
even.
don't have like a coin with me right now, so
All right.
whoever wants to go.
Market volatility.
Yeah.
Come on, Barry. I always go first.
okay. Okay, sure,
You
sure, sure.
shine.
Yeah, let me go first then.
Thanks.
Yeah. So I can say market volatility is how the market basically measures fluctuations. Yeah, so there are different measurements for these fluctuations, like the VIX index. So that means mostly a volatility index. So like when times are good, the volatility index goes down. When times are bad, it goes up. So that actually translates that when there is uncertainty in the market, you'll find there is a lot of volatility, and markets can tend to skyrocket or mostly drop heavily to extreme levels. And yeah, it's mostly volatility mostly occurs in uncertain times, but then there are also good times when volatility is actually really strong, like let's say in stocks. Yeah, stocks usually go up. So if like the company is doing extremely well, you find yes, there will be volatility, and volatility equals opportunity, because you find a stock usually does maybe $1 a day, then out of the blue it starts doing $10 a day. So yeah, it's that kind of measurement, I would say, of the underlying assets and the profits that are being made or lost during that period of time. Yeah.
Perfect. Thank you, Barry, for your definition. I don't know if you, Rhea, want to add something to that.
No, not really. I mean, Barry does, see,
Yeah.
Barry, that's Barry's thing. Like
Mhm.
Barry, the difference between Barry and I is Barry understands more of the fundamental and the economic side of the markets more than I do. Me, I love the technical side, the market structure, and also just the psychology behind it all. So that's me. But don't talk to me about some of the other stuff because I'll be like, whatever. I just
Yeah.
show up and trade.
And that's why both of
I
you
see.
like I like, like talking with you both because both of you have like different ways of seeing things and you guys complement well each other when with your answers. So, well, for this, thank you so much, Barry, for your definition. But now I would hope that you can answer this next question. Yeah, both of you, of course. What are the common emotional pitfalls that investors and traders face during volatile periods?
Hmm. I mean, when there's volatility in the market and things are getting sporadic, it can really mess with your emotions, so it can really kind of, depending on the person who's sitting in front of the screen and what kind of market execution they're trying to take. um you know it could be the difference between you executing your trade and leaving your trade alone, or you just being like, I'm freaking out. Let me get out. Let me get out, or let me do this. I mean, it could really just mess with your nerves. That's one thing. So I think in messing with your nerves, it can cause a trader to exit trades prematurely instead of just entering their trade and sticking to their plan and just letting it do what it does. Um, it could also cause traders, I would say, to have that sense of FOMO, which we talk about, that sense of fear of missing out. Because they see, price moving and things going, and they're like, oh crap, I don't want to miss out on this. Let me take action. So there's always the same kind of similar reactions that we see. Um, and it could happen to a new trader or a seasoned trader. So that really doesn't really matter. But of course, I think the more seasoned you are and the more your sword in this is sharpened, it gets a little bit easier. But I mean, everybody deals with it because we're all human. We're not robots. Uh, so that's just so that I think a natural part of the whole process. I don't know if Barry has anything else he wants to say.
Well, there's a lot I want to touch on just now, because
Go
you know
for it.
what's so funny? Before even this episode which we're doing, there was something that I read which is similar to the current topic right now. So okay, just comment on what Rhea said about fear of missing out. Yeah, a lot of traders do fear missing out. For example, let's take gold. Gold, it's been skyrocketing, but right now it's gone down. Like I literally think people would just literally buy gold today with a huge amount lot size whatsoever, and then it starts going up, and then they're enjoying that type of profit. Then they think it's going to go up forever and everything like that. Then they don't take into consideration that this is just probably a volatile period, and that work inversely the same when things change. Like it may go up 10%, 2% or something in a day, but it can also come down 10% or 2%. That's one thing a lot of investors and traders may fall into, like an emotional pitfall. So in the beginning, there'll be the emotion which they'll have in their head is greed. Yeah, where they just wanna get into it, increase lot size, not even taking into consideration the downside. Then when the downside hits them, they're just like, oh my gosh, I should have stuck to my trading plan. I should have stuck to my risking 1%, because yeah, yeah, markets do change. They have volatility and everything like that. And so yeah, the article that I was reading, one guy who is an investor, he was talking about how um he closed like majority of his positions during the 2008 crash. Like he sold all of his shares and everything like that. And then he was asked a question: today, where do you think your assets would have been? How much do you think you would have had if you held on to your trades? Then he says, I would have been a multi-millionaire. But because he did not have the patience and did not calculate his risks, he had that emotional roller coaster that decided to tell him to just cut his losses and get out of the market in the 2008 crash. Yeah. So, yeah, that's how I see it. Either ways, yeah. We can continue.
No,
Yeah.
thank you so much
I
to
mean,
both of you.
in a nutshell, you're losing money either way.
Mhm.
You know, you're losing money by cutting your losses, or you're prematurely, or you're um losing money by just overextending, over leveraging, getting too excited, and we've talked about things like that. So we've got stories, right, Barry? We've got stories.
Yeah, most definitely.
You know what I'm saying? So yeah.
Yeah. So I also want to add, the person in the article, yeah, it could have gone two sides. He would have lost everything if he didn't cut his losses, or he could have made more if he didn't cut his losses. So it's like a double-edged sword. So nobody knows the future. Maybe that would have been the worst time in history, like the worst of the worst, more than the Great Depression. So yeah.
No, and I think like emotions can be really strong, and like when they're positive, they can be like the best thing ever, but when they're negative, like such as greed or such as like this anxiety that any person might experience, and especially in trading when they just want to have success and to have a like a good trade or whatever. So that's why it is really important to develop a strong mindset, which leads me to my next question, and that would be, how can investors and traders develop a strong mindset to handle market volatility?
All right. I guess I go first, Ria.
It doesn't matter.
Yeah, you go first, Barry.
Okay, sure. So, to handle a strong mindset, I guess all comes down to your risk. Yeah. okay, you can also have the best risk strategy. Let's admit that you can have the best risk strategy and everything, but then there are times when the market just kind of probably overextends on what you actually anticipated the market would do. Yeah, so I've actually seen that before. Like you can put like a hard rule on yourself that you not let your whole portfolio, like an investor, go below 20%. Yeah, then you find the market starts to reach those levels of 20%, let's just say maybe 15%. You start to panic. So that's where you kind of also need to evaluate, try and see if that's where you indeed did cut your losses, or keep holding. But of course, at most times, you need to stick to what the plan originally was, which is if you had put a hard limit on your portfolio of no more than 20% losses, then you just have to stick to that so that even when the market does recover, you'll be able to see how far you may have lost and maybe readjust your risk overall in your whole portfolio. Then, yeah, because at the end of the day, it's all about survival in these markets. That's what I can say. It's all about survival. You need to be able to survive through the good times and the bad times. So if you're just hoping to like risk your whole portfolio in the market when like it's a volatile period, you have nothing left even when like the good times come for you to actually benefit from. So that's another thing one needs to keep in mind as an investor or trader. So I would say to keep a strong mindset is by managing your risk, sticking to your risk parameters, and overall just understanding also what's going on. Yeah, because if you don't understand what's going on, you're gonna get into a state of panic. Yeah, which is what also drives the markets, greed and fear. So yeah. Mm-hmm.
Definitely. Yeah.
I think that last point is a really good point. Um, the understanding what's going on. And so let me give you an example, right? Andrea, you know how we mentioned like the 2008 market crash and different things like that,
Yes.
right? And so a
Yes.
lot of times people who do not understand who do not understand um how the market moves or understand the structure of the market or different things like that. If they see, and you see this a lot with people who just like maybe just, maybe they're just buying shares and just holding shares, or maybe if people have, like here in the United States, I don't know how it is in other countries, but here in the United States, people can build, like retirement accounts with their job, and their job does the investing for them, basically. And so when you've got somebody else investing for you, you don't know what's going on. So what ends up happening is when people see certain, we call them pullbacks or corrections in the market, people don't know that that's a pullback or a correction, right? Like they just think, oh my gosh, it's going down, and they don't realize that no, it's likely to continue back up. It needs to I think of it like a rubber band. You remember, or a slingshot. You remember being a kid and, playing with little slingshots. You would pull them back and then let them go and they would fly forward. It's like the market goes through that. The market goes through, it's like the little slingshot, the little rubber band man. You got to pull it back and then let it go so it can fly to the next level, So people don't understand that they end up making decisions, costly decisions, or impulsive decisions, because again, they don't understand what's really going on. They don't understand how to look at the overall bigger picture of what's happening in the market. They don't know how to zoom out and look at bigger time frames. They don't understand how to look at the market as a whole and see how everything moves and correlates together. So I think that was a really good point that Barry made. So thanks, Barry.
Yes, thank you so much, Barry. But I also liked your like metaphor, the rubber band metaphor, to to give like a practical example, let's say. And we have some comments in the comment section. God asks, "Do you dump a pair after losing a trade on it? Be honest."
So are you asking, do I just make a decision not to trade that pair anymore if I lose a trade on it? If that's what you're asking, no. No, I don't, especially if it's a pair. Usually I have my favorite pairs that I trade and I'm going to trade them all the time, no matter what. And I'm a yen girl. I like trading Japanese yen pairs. Um, so no, I lose a trade, I lose a trade. On to the next one. But it
Okay,
won't,
then how
it
about
won't,
you?
yeah.
Okay, how about you, Barry? Do you want to answer that question?
Yeah. I actually do. Well, not after one losing trade, of course. Yeah, it needs to be like over a period of time. Like if it's not serving you, yeah, dump it. Yeah, that's my actual answer. If it's not serving you, dump it. Like, Ria, you're laughing
Simple as
about
that.
this.
As simple
Yeah,
as that.
so yeah. So it's what I can say is like certain pairs assets, they just sometimes come to their end or when they are just not really moving. Yeah, we can take for example, let's see, what can I think of? Okay, Snapchat. I saw Snapchat some time back. That was like in 2017, 2018. It wasn't popular back then. Like people just use it for pictures, but not as much as today. There was a boom part where Snapchat. I actually thought to myself, like Snapchat may actually be a very good company in future since it deals with this. I didn't know I was right on that, but yeah, those were my thoughts. So Snapchat was like at $2 and was going to one. It looked like a stock that's actually dead. So those are really, really like periods where some people would actually dump a certain asset because it's not really giving them the returns that they're looking for, especially if you're only buying it to the long side. So instead of you losing money, you need to also think about the part of you losing money. If you're losing money and you're always trying to trade a certain asset and it's not giving you the returns that you're looking for, yeah, you just have to dump it because it's not serving its purpose. The purpose of these assets is to make you money, not lose you money. So you need to know your worth. Yeah, in these markets as well. So yeah, that's all I can say.
Definitely. Well, yeah. Thank you guys for answering God's question. And also, Agustinho says, "So sorry I am late." No worries, Agustinho. I don't know if he's still here, but you're always welcome to join us. And now I wanted to get a little more personal because I wanted to ask you guys and also the people in the comments that if you can share any personal experience of navigating and particularly volatile market period. And how was it?
So I'll go first. When I first started trading in futures, I got this bright idea to trade oil. Let's just say after a week, I was never trading oil again because I was not used to that kind of volatility. I just wasn't used to it. And I realized that I could not approach oil the same way that I would approach currency pairs, for example. And that's the thing, guys, when you're trading, you realize that the same thing doesn't always work for everything you trade. The same time, like it just it will not, it cannot, because not everything moves the same. And so for me, I've always been a Forex girl. I've always loved the Forex. So diving into a different market and trading something I've never traded before. um I think oil, yeah, I was like, I can't do this. I think it boils down to just knowing yourself. For me, I just realized it, I probably should just walk away and not trade that and maybe go trade something else. So that was how I handled that. I closed my computer and walked away. That's all I can really say. Barry.
Like never going back, never going back.
I don't think,
Basically.
I don't know if I will ever trade oil again. And if I do trade oil again, I will probably have to really understand it. And I just ain't got time to be trying to understand oil right now, because I just want to make money. So maybe another time. Uh, but no, it was not for me. It was too much for me to handle.
It's all right. What about you, Barry?
All right. For me, it's 2020. Yeah. Yeah. So that was during the COVID period. I was wondering what the heck is going on, yo. Like, things were moving like 200 pips in a day, and I'm just like, what is going on? Like, pound dollar was moving, I think, 100 pips. Everything was just moving like crazy. That's when I think I understood that you don't need to like calculate your risk according to pips. Yeah. Because that's why I even started saying that things were moving like 200 pips. But the fact is, you shouldn't calculate your risk according to pips, because pips will never always be the same value over time. You need to calculate everything according to percentage. So, like, if you're calculating your risk, you need to calculate it like 0.5%, 1%, not 20 pips. You'll be stopped out like 1,000 times during a market volatile period, because you put 20 pips stop loss, stopped out, put another one, stopped out, you see an opportunity, stopped out. Then you might think that it's probably your system that is not working, but it's actually your risk management. You are not calculating things the right way. So yeah, for me during that same period of time, what helped me navigate through that period was actually learning just how to um, use percentages as risk, like 0.5%, 1%. But the worst part is I did lose my account during that same period of time of 2020. Like, I did have good runs throughout in terms of returns and everything like that. But I never took into consideration that a time like that may come. And I feel it was very important for me to understand that times like that can come and will come. So even now, like, yeah, just through that worst experience, it has helped shape my trading in a way that I am now able to navigate volatile markets even better. Because, like, I may see a really huge red candle and I won't worry as much because I have a predefined risk parameter. It's not like it's all based on emotion. So yeah, that's how you can literally survive in these markets if you have predefined risk parameters. Yeah. And then volatility will just be like that extra cherry on top that helps you make more. Because you find like in volatile moments, if you have like a 1% risk, you can actually even make like a 10 to 1, even a 20 to 1, just because it's a volatile period and you're managing your risk really well. So yeah, people make money in volatile times and people lose money, but it's better to be on the part where people make money. Yeah.
Okay, perfect. Thank you so much, guys, for sharing your personal experiences in like different periods of time because I don't think yours was in 2020, right? Yeah. Was it like before or after
It was
2020?
this, honey, it was this year.
Ah, okay.
Girl,
So
couple
it was,
it was a
it was a
couple
mess.
months ago.
Oh, oh,
So,
okay. So it
but
can happen. Always.
I never lost an account though.
Hmm, that's a good
And
thing.
in all my years of trading, I've never blown an account and I've never lost an account. Can you believe that, Barry? I'm telling the truth though.
Whoa.
I believe you. I
I
believe
never
you.
had. I've never
That's
blown an account
crazy.
and I've never lost an account. But that's just because I've always been conservative, I guess.
Mm-hmm.
So I'm just kind of like, mm. And I've gotten better at walking away from what I feel like I need to walk away from. So, but yep, God, I'm telling the truth. I swear, I promise. I've never,
I saw the comment. He doesn't believe you.
like, I don't believe it. No, I promise. I've never have. I've never have. So, so yeah.
Well, thank you guys for your experiences. And now to sum all this up, I wanted to ask just to close this like my question, the questions area, and then maybe give the space for the people that are in the comments to ask their questions. What specific strategies or techniques have you found helpful in managing your emotions during market volatility?
Well, I got to be honest. I'm not. I haven't dealt with market volatility so much because I am more of a swing trader. So like for example, like for me when I trade, I set my trade and I forget about it. So I really don't care what's going on in the market when it's happening in the market. It's just kind of like I let my trade do what it does. I'm not in the market every day, day to day. So but I am working on that though presently. I am working on trying to work on being more of a day trader than just a swing trader and trying to do the combination of the two. So we'll see how that goes, guys. I'll keep you posted. But for me I'm a mindfulness person. And that's where Barry and I differ. Not saying that Barry doesn't care about mindfulness, but I'm just more of a mindfulness person. I'm more of a, you know, let me get zen. Let me um
Mm-hmm.
uh and I love listening to things or reading books or different things like that. If I feel like the volatility is too much, honestly, I just don't trade. I've developed the discipline of just sitting on my hands, knowing when to just say, you know what? I know myself emotionally enough by now to understand what I can handle in the markets and what I cannot. And I think that's a great strength for any trader to be able to kind of develop, is really knowing themselves as a trader and knowing themselves emotionally and knowing what they can and cannot handle and being willing to say, I'm not trading today because this is just too much for me. You know, that takes a lot of strength. So that's kind of where I'm at with that.
I love that. I love that. And now it's your turn, Barry.
Yeah, I love what Rhea said. Know thyself by Socrates. Yeah, so yeah, it's really important. It is really important. So, but for me, to manage emotions, yeah, like I said, predetermined risk parameters. Yeah, I'm just that logical guy who's just like, this is where everything should be. If we go beyond that, it's good. As long as we've survived this period or day or week and everything like that. So, yeah, like I said, don't think in pips, especially in the Forex market and everything like that. Just think in percentages. That way, you prevent yourself many headaches and a lot of stop outs, unnecessary stop outs actually. So yeah, those are my thoughts. Hmm.
Well, thank you so much, guys. And those were all of my questions. And like I always say, you always give such interesting answers. And it's always a pleasure to like ask my questions for you to answer them as both of you have experience in this industry and in these markets with these things. So yeah, thank you so much, guys. And for anyone watching, I think God had a question, no, a comment. It says, to be honest, I use session and market trend to avoid manipulation from but patience about FOMO. Yeah, FOMO is dangerous.
I'm just thinking about what Barry said about risk.
Mm.
You
It
know,
all comes down to risk.
one of the things I learned when I first started trading is having a weekly risk. So, or no, it wasn't a weekly risk. It was, yeah, no, it was. I was told by my mentor, don't risk more than 5% of your account in a week. Now, obviously, we're prop firm traders, so we can't be doing all that. You know, we got to be more, you know, but that helps. That helps a lot. Not just look at it as a oh, risk per trade, but also what's your risk per day? What's your risk, for the week? And can you be disciplined enough to say, okay, once I hit that for the day, or once I hit that for the week, I'm done trading for the day, or I'm done trading for the week. Can you have the kind of discipline to do that? Those are just some thoughts I'm thinking. All right, guys. Does anybody have any questions or comments for us before we leave for today? Anybody?
Any comment, any question is always welcome.
Especially about risk, because Barry was definitely touching on the risk management quite a bit, which I agree. Risk management is very important.
Yes.
A very important part of profitability and finding success in trading. As a matter of fact, it's one of the number one reasons why people lose their accounts in prop firms. Did you guys know that? Did you guys know that the number one reason people lose their accounts in prop firms is because they fail to manage risk properly? And so they always violate their daily drawdown. They just are not managing risk. Got no questions. You guys made my day. Thank you. Thank you.
Thank
Me
you
and
so
my
much for
friends
joining us. It's
made your
always a
day.
pleasure to hang out with you guys. It's always a pleasure.
Thank you. We appreciate that. We
Yes.
appreciate that. All right. Well, if you guys got any value from anything from today, please feel free to go ahead, give us a big thumbs up on YouTube, leave us love in the comments. If you are not already subscribed, be sure to do so and hit that notification bell so that you can be notified when we do go live. And
We have a comment from Agostinho.
Agostinho, we know, but we thank you so much for coming to hang out with us and for doing your very best to understand us when we speak in English.
Mm-hmm.
It's
If I could speak Portuguese, I think he speaks Portuguese.
Yes, he speaks
I
Portuguese.
don't, but I speak Spanish. Gracias.
Sí, hablamos español,
Español. Gracias por estar aquí. I don't know how to say
italiano,
it.
italiano
Grazie
anche.
per essere qui. Grazie. Grazie per essere venuto. And that's it. And thank you for being here. Thank you.
Oh my
Maybe I can
goodness.
learn some Portuguese.
I think I'm freezing.
A little,
Yeah.
yeah.
So with that,
Oh, yeah, obrigado. Yeah.
all right. So with that, Andrea, what are you got any closing remarks?
Yes, of course. Lastly, guys, remember to stay sharp, keep a winning mindset, and remember that with Forex Focus, success is just one trade away.
It is. We love and appreciate you guys. Just so that you know, next Monday, Andy and I are not going live because Andrea will be on holiday.
Yes.
But we will pre-record next week's live, and then we will just share it on Monday so you guys can go ahead and watch it. We may air it live for you, but it'll be pre-recorded, so we won't be able to hang out with you guys that day. So just kind
But
of
we
let
will watch your comments. If you leave any comments, we will watch them. Yeah.
we will watch your comments. Absolutely.
Yes.
All right, guys. Thanks so much. We love and
Thank you,
appreciate you,
guys.
and we'll see you again soon.
Bye. Bye bye.
Bye-bye.